This is Merrick Fuchs here today to talk to you about what happened with healthcare stocks in the stock market at large last week, and more importantly, puzzle out what might be happening in the coming week. Now this week is all about Hurricane Sandy, which just might have the devil in her, but even if she's the product of a bit of hype and doesn't have the impact that people are fearing, and let's hope that's so, she's clearly going to truncate the week in the market. Now the markets are closed on Monday, a rarity for a weather event, and presumably will also be closed on Tuesday, and will probably foreshorten much of the rest of the week as traders lose power and have things to deal with at home and don't get in, which all adds up to this. You have to beware and be aware that trading is going to be light this week. And when a small band of traders, the only traders left standing, are in charge of the trading, a lot of times you have fleeting overreactions to morsels of news. You really have to be careful about those heightened reactions to news that won't last. Now before we talk more about this strange coming week, let's talk about last week, because it was a clown parade of earnings. We had disappointing earnings from everyone from Caterpillar to Apple to Amazon. Geez, Apple couldn't even impress with the new product. They introduced the iPad mini, which a lot of traders thought was evidence that Apple had gone ahead and invented the iPhone again. Hey, look, the real deal here is with these earnings, once more, we're having poor growth on the top line, and that's no good. You can't cut your way to prosperity. In other words, you can cut costs to ribbons, but that doesn't get you anywhere long term. When the top line, when sales are not growing or disappointing, well, that's evidence of a slowing economy. And over time, you can't do anything with that. Now, Merck, by contrast, reported decent, though slightly mixed earnings. They did benefit from one-time items like a lower tax rate and lower merger costs, and obviously their asthma drug ran into some trouble. But what you have to look at when you talk about Merck is that 3.7% yield, which is a sight to behold in the sorry fractured state of this market and this economy, plus their drug cupboard, which is chock full, cholesterol, sleeping, osteoporosis. It looks really good, and that's part of Merck's story going forward. Stocks are obviously anticipatory mechanisms, so what counts is what might be happening going forward. Luckily with Merck, you have the 3.7% yield. You'll be paid while you're waiting for these drugs to come about. That looks really good. Now we do have to talk about GDP, which was reported on Friday and came in at 2%, which heartened a bunch of traders. A couple things here. Obviously 2% is no big deal in the grand scheme of things, still shows that the economy could be dancing along the lip of a recession. But here's the main deal. This was the first draft of the number. We're going to get 3 drafts. Do not jump to conclusions. It's tantamount to jumping off a bridge. This number is quite often revised by upwards of 50%. There are a few things that the media, all these talking heads, all these pundits get more wrong than GDP when they start flapping their gums about what that first draft number means. So please wait to jump to conclusions. The economy might be a lot better than it appears, and it might also be a lot worse. Now, one other conception that I want to sort of dissuade you of having, this consumer confidence number that a lot of people are also heartened by. And when I say heartened, do remember that the Dow was down almost 2% last week. So there's not a lot of happiness going around, but it was really centered in GDP and consumer confidence. Unfortunately, neither holds water. Now, consumer confidence is up, but so is household debt. It means that the public, the American public, is sort of caught in the same state of delusion where they're just larding on the household debt, and that's showing up in consumer spending and in consumer confidence, but it's not sustainable. It's not viable over the long term. Now, outside of that, we just had a small item with Citigroup that's worth mentioning because they were fined $2 million only for letting an analyst run amok and releasing IPO information before its time. These are always events when it comes to Wall Street and penalties that you can't overreact to. Obviously, $2 million is a rounding error for Citigroup. It's akin to these times where they get caught for some sort of misdeed and are told to apologize by saying they did nothing wrong and promising not to do it again. Now, in the coming week, these are the big stories besides the hurricane. Ford and GM is going to report. Now, GM's comeback is one of the greatest stories overtold. So we have to be careful about these earnings. In other words, GM is widely acclaimed for coming back after the government gave it $50 billion. But really, though they have had their house in order a little better than in the past, they've just been incredible beneficiaries from the Japanese tsunami that basically freeze-dried the business and the efforts of Toyota and Honda. Now, as Toyota and Honda are coming back up, guess what's happening to GM? It's going down. It's going to be a major story of the coming year and something to look out for. Ford suffers from the same thing, but they're in much better stead than GM overall. Now we have Oracle with a conference call at least scheduled for the middle of the week, and J&J for a review of coming drugs, which will be important and we'll get into very much next week. But the real story about this week is Sandy. Also, with the election a week from Tuesday, the market is just simply going to exist in a state of suspended animation until then. It's a close election. Traders don't want to commit, much less overcommit, till they know exactly what's going to happen. So look for a very, very quiet week and be wary of overreactions. Outside of that, here's wishing you a happy, healthy, and profitable week as always, and please stay safe and dry. We'll talk next week.